are doing great. Amazing. I'll just share my screen in a bit and hope to see if we are able. All right. So we it's what the market has for us today. Once again, I hope you guys had a beautiful week and an amazing weekend as well. Uh, with the first article here, where we're going to start from is looking into what the market has for us. As we all know, probably during the weekend, Trump did go ahead to meet with Ursula van der Leyen, and they did come to a conclusion and an agreement in regards to the US and the Euros trade deal. As we all know, this has been going on for quite a while, and they have actually been going back and forth in regards to that particular trade deal. And apparently, uh, they were able to come up with one, or what may look like one of the greatest trade deals that Trump has been able to sign in the past few months, 7 or so months of his regime. So we have seen that this has been able to trigger the market already, and the market's already making moves in regards to that. So I'll be just sharing my screen in a bit, and then we can look into how the market has been able to price in the EU trade deal between Trump and Ursula von der Leyen, and we're able to see how best we can be able to move on from there. So here, that count starts with is this particular article where they say that the dollar eventually it hits a 5-week high. Now, as you all know, that what these trade deals mean for the US means a better trading conditions, and definitely also means a boost for American investors as well. So they're telling you that the US dollar index held above 98.6 on Tuesday. So we know did hold on Tuesday after rising 1% in the previous session, supported largely and largely supported by the euro weakness following a new US EU trade deal agreement seen as favoring the US economy. The deal, which imposes a headline 15% tariff on EU goods, drew sharp criticism uh, from European leaders. France called the agreement unbalanced, with German Chancellor Merz warned it could cause significant harm to the German economy. President Trump, on the other hand, also reiterated on Monday that countries refusing to negotiate separate trade deals could face tariffs ranging from 15% to 20%, well above the 10% tariffs that he did put in as general tariffs. He put at a 10% level earlier on in April. Meanwhile, the Federal Reserve is widely expected to keep interest rates unchanged at its policy meeting on Wednesday. Now, that is going to push us into what we have on our calendar coming onto this week as well. Where do we expect some kind of volatility? So today being a Tuesday, as we all know, the month is ending and we have the JOLTS openings, the JOLTS job openings. So this basically means that they're looking at the number of jobs that were created in the American economy within the previous month. And of course, this helps us to anticipate how the all right. So as I was saying, these JOLTS job openings are able to give us a gauge of how many jobs were definitely created in an economy within a given period of time. usually a month. So the other thing is that this helps us try and anticipate or see what the job figures may look like. As we all know, the month is coming to an end, and it's about that time when we look at the non-farm payrolls as well. So that will be the job openings. The previous was 7.69 m, and the consensus right now is was 7.55 million. And then we saw that the forecast for this upcoming news event is 7.5 million, which basically means that the market is looking at lower job creations in the previous months. If that happens to be the case, that will mean that, of course, there were not enough jobs for take up, which means it looks bad on the global scale when it comes to employment. If few jobs are created, meaning few people get employed into the different sectors within an economy, which is definitely not something you would want to look at as well. So lower than our previous is definitely not good. Lower than forecast is way, way worse. So moving on to tomorrow, we shall have some GDP growth rate quarterly and quarterly. Then I think the main focus tomorrow will be the Fed interest rate decision. Now, as you might know, up to now that Trump has been going back and forth with Jerome Powell when it comes to what we call the Fed or the interest rate policy. We know that Trump has been calling for interest rates to be cut down time and time again, and the Fed chair just seems like he keeps saying he doesn't have enough data. He keeps saying that they are waiting to see how the market prices in tariffs time and time again. And at some point, we have seen some of the people from Trump's side calling for Jerome Powell to actually retire and give up his seat that will be ending next year because he has a 10-year agreement or contract, if you may say. But they have been continuously pushing for him to actually let the seat go. So we don't know if this week he'll be able to yield to the pressure coming from the Trump administration, and definitely see if he can definitely go ahead and cut the rates. But other than that, as based on how solid and strong he has been with his decisions, we are still looking to see that he holds the rates are steady, definitely, to keep trying and see if he can get some more data coming in from that side. So that will be as far as this Wednesday is concerned, and that will be a very, very major news event for the market to watch. Moving away from that, shall see the Bank of Canada coming up with an interest rate decision as well. As we all know, these are some of the most aggressive guys when it comes to cutting rates. It has been one of the people has been always the Bank of Canada. When they decide to cut, they have been aggressive. We saw that with the towards their elections, even after the elections, 25 basis points on all sides. Then when you look at this Thursday, what shall we have? Shall have the personal income month in, month out, which may give a small insight into the upcoming CPI that will be for next month as well. Then the Bank of Japan interest rate decisions, as we all know, usually happens in the last week of the month as well, and it will be very, very important after Japan did come to a trade deal with the US, of course, as of recent as earlier last week. They had a negotiation with the US in terms of trade deals. So in that case, shall be seeing what the Bank of Japan will want to do. Will they keep having their negative interest policy because they have one of the lowest interest rates? And of course, it does hurt the economy over time. So now we are going to move away from this a bit and then now dive onto where the market opportunities definitely are into our technical analysis and definitely see what currency pairs will definitely have some market opportunities for us going forward. So I'm going to just come up and get my MT5. Then we can be able to see what we can be able to anticipate from the markets this week. All right, so let me just get my DXY chart up in a bit. There we go. So USD, all right, so this is a gauge we tend to use whenever we want to trade USD pairs, and we are using the DXY to get a general, how would I call it, when we are trying to get a gauge or we're trying to see how we would want this to look like, or we are going to use the dollar index to trade other currency pairs that are most definitely dollar related. So looking at the chart we have over here, This is on our H4 time frame, so we're going to do majorly the H4. We already know that gold is having a major correction ever since the trade deal started coming into play. And what we would want is that right now price has a major resistance on the dollar as well, the dollar index. And the major strong level is this level over here, as we can see. Let me just make this white. So we do have this resistance level, or someone call it a supply zone. And we see that we have come strongly into that zone. And of course, definitely would expect the dollar strength to continue after the deals that have come into play. The only thing that we want to watch for is see if the Jerome Powell speech tomorrow or the interest rate decision does not get to hinder, doesn't get to hinder any of this correction. Because of course, if the market, if the Powell doesn't sound confident enough with the decision tomorrow, investors may not get enough confidence to reinvest in the dollar. So we may end up seeing a deep retracement. But regardless, shall expect a retracement, especially if gold is able to break above these highs and give us a retracement to the downside. In the meantime, we shall be looking for intraday opportunities that we shall be looking for around lower time frames to see how we can have some moves to try and see if we can continue this push to the upside. So looking at my 4-hour time frame, I'm going to just basically mark out some demand levels here because I'm going to be bullish for now until I get to see what Powell has to say in regards to the Fed rate decision. So when you look at this lower time frame, this is a 4-hour time frame particularly, I'm going to be looking at zones where there are, let's say, a major break. So I would like to see a break and retest of this area. And of course, with a break, I mean a candlestick closure above this area, then we can definitely see a retracement to a demand level. So I'll definitely see if price will have to close above this zone first. Let me just mark that high. We can have this high at that point there. If we see a candlestick closure, we'd love to see a retracement to probably this demand level, and it will be our area of interest. Now, by area of interest, we are definitely just going to look into this area and try to look for confirmations. That's the whole point of an area of interest. Remember, we're trying to look for intraday opportunities. So generally, we are going to just be looking at areas where we want price to come to. Then we can look for definitely a confirmation or a signal that the market is going to give you when price gets to that area of interest. Now, what does that mean? That basically means that you can have an area, let's say marked out, for example. So here, price hasn't closed above that zone. So I wouldn't love marking this area, but you could have an area like this, and when price gets to it, you're going to probably drop a time frame or two lower and look for some kind of candlestick confirmation or a moving average confirmation, entirely based on how you tend to trade. Then you're able to take that decision on whether to buy or stay out of the trade. That means price can come into a zone like this and still fail to give you definitely a confirmation. So right now, what I'm looking at, because we don't have a candlestick closure above this high, I'll still be looking to see if price can come all the way to this lower area here. And definitely here is where I would want to watch to probably take a confirmation. So on the other hand, I can go ahead to see if I will need to refine this zone. Remember, I want price to come back inside my white box. So I can drop down to probably a 30-minute time frame. And here I'm basically just looking to see. Oh, sorry. Okay. And here I'm just looking to see if I can be able to refine toward this kind of demand level, as we can see over here. Then I'll be able to have this as my area of consideration. And once again, by area of consideration, it's an area I'll just be looking to watch and see if price is able to give me some sort of confirmation of a sort. Then I can be able to take a informed decision or a highest probability trade to avoid some kind of bad trades. And once again, I'm going to reiterate this. One of the biggest challenges we tend to face is that many of us know how to mark zones. We know how to mark areas of interest and all that. But the challenge we tend to get is that when price gets to these zones, we just want to take a trade without actually looking at the bigger picture. By the bigger picture, I mean that when price gets to a zone, yes, you've marked your order block, you've marked your demand zone, you've marked your that area you want to actually watch for. But price gets there and you just want to enter the market without taking some kind of confirmation of a sort. And that is very, very, very risky. Not every area is meant to hold price. As we have had by now, probably the market is a bit algorithmic. That means there are areas that will not necessarily hold price, but the algorithm will put them in place just to probably manipulate people, something of that sort. So you have to be very, very careful with the zones. You're going to have fake breakouts. You're going to have a fake change of character. I mean, there is a lot you're going to fall prey to if you just want to mark out probably a demand zone or an order block and probably take a time for a trade on it just out of the blue. So when you have these areas of interest, you want to have some kind of confirmation criteria. It should be down in your trade plan. That's very, very important. It should be done in your trade plan so that you can be able to probably be able to follow some set of rules. So looking at this on a daily time frame, as we've seen in the dollar index, when the dollar was in a recovery, the dollar was being bullish. We have seen that that dollar pairs, like now the DXY, the GBP USD, we know that when the dollar is strong, this pair tends to sell. So when you look at this carefully, uh, while the dollar index, let me get it white. Somebody complains of the color. Let's have it on this other hand. Let me see background on weights. So let me just have it on this side and look at its daily time frame. So while the dollar was in a recovery, we're seeing that dollar index. So the dollar index means the US dollar on its own, right? While it was pushing and being bullish, we did see that a GBP USD was going to the downside. That's the inverse correlation that I keep talking about, and this is what tends to our advantage. So now that the dollar index has reached to this area, in order for this pair to continue going bearish, it will have to break below this demand level over here. I would want to see a break below this demand level. But for now, what I'm looking at right now is I'm seeing a breakout at this particular level here. I am seeing a breakout at this particular level here. Then what you anticipate is to probably get a retracement into these zones over here. So I'm going to use 4-hour zones to try and reduce the noise as well. And then I'll look for what supply zone is there in between. So we do have a nice breakout over here as we have seen. And what you're going to look for now is going to be our supply zone that definitely led to the breakout of that zone there. So when I look above here, I do have this supply zone, and it's going to be my area of consideration. So basically what I'll be waiting for is for price to definitely give me a retracement all the way to this zone, probably getting a confirmation, and then I can be able to target this area. So when I target this area, you're definitely going to be watching either to see a confirmation for bulls, or you see if price comes with high momentum, breaks below that area, and then definitely tries to continue going to the downside. If, of course, the dollar continues being strong, and of course, Jerome Powell doesn't sound so negative to Trump's mission as well. Yeah, so that's what we want to look at on GBP USD, probably a buy to that area, then a sell to the downside. Or on the other hand, you'd also have a sell aggressively coming all the way to this area, probably give you some retracements before it continues pushing to the downside. But for now, since the dollar index has some fundamental strength on the other hand as well, you'd want to probably rely a lot on trading in favor of the dollar for the time being until we see what the Fed has to say tomorrow. And until we see the backlash, as I read from the article earlier, you are seeing countries like France and Germany trying to come out on that deal that Trump was able to offer to Ursula, who happens to be the chairman of the European Commercial Bank or the European Union in simple terms, during the trade deal that they just announced at the start of the week. So this is GBP USD, and this is the outlook I would want to be seeing through the week, the areas I'm going to be considering today, tomorrow, and seeing how the week definitely plays out. These are the main areas of interest we are watching at. I'll try to relate this a little bit, I think, on another dollar pair. Let's look a bit at USD JPY. So this was analysis from the last time that we were here. And as you can see, we did have the breakout of the trend line supply level. Price that came back to a supply level, pushed to the downside into this level we had marked earlier on. And then we saw that push to the upside. So for the guys who are there in that market snapshot session, I hope you guys are able to capitalize on some of these zones. This was the level we're looking at to continue the buys to the upside. So those of you that would like to see how we came up with the analysis, feel free to go and check through the previous market snapshot videos. We did explain how that move happened to come about. So once again, we are going to start from the weekly time frame. This is USD JPY, or the US dollar and the Japanese yen. Now, as we see that for our past few weeks, we have had some kind of correction move that has been giving us some kind of bullish trend per se. So we had the supply level above, and we are seeing that price was trying to come up to this area and definitely trying to break above it, seeing if you can get enough momentum. And you never know that the trade deal between Japan and the US that they just signed earlier last week probably might bring out some kind of move. So you can start with the breakout from here on this particular pair. We had this nice breakout and of course some retracement into the zones. And now we see price definitely trying to push all the way up. Now remember, this is a weekly time frame. So every candlestick here has 5 days of price action. So coming into this, what do we see? As I told you, from the zones we're looking at from last week, price was able to come all the way into a nice demand level here and definitely respect this demand level. As you can see, nice beautiful engulfing pattern. This demand level here led to the breakout above there. These are nice things you want to be seeing when you're looking for your trading opportunities. So looking at this, ever since price came from this demand level we have had every single day, has been strongly bullish, and currently price has met a supply level as well. So from the demand, price has come all the way to this supply level here. If you want to just confirm the supply level, you can always toggle with your line chart and you can see we had a nice beautiful breakout. So these kinds of supply levels sometimes depends on the momentum. You can expect price to give you a nice retracement, but you would want that retracement to entirely be a confirmation based. This is a daily time frame, so getting a lower time frame confirmation should never be a problem. Never ever be a problem. So the first thing we're going to do, we are going to first refine the supply zone to its maximum, a supply level that is actually not mitigated. So when you look at this carefully, we had this zone over here. Sorry, let me just mark it up perfectly. Nice. So we had this as our last resort supply level. Now we said price was able to come and then tap onto the supply level and it's giving us a nice retracement. So we're going to look below these areas here and look for definitely a 4-hour area that price would love to definitely come to. So I'm likely going to remain bullish on the USD and I've just told you reasons as why this is my perspective right now. It's because the dollar has gotten a fundamental backing coming from Trump's recent announcement and the recent moves he has made, signing a trade deal with Japan, and now we are seeing the European Union on board, despite the individual countries giving some backlash, as long as it does have the second largest economy in nominal terms, because of course China remains the largest economy as far as GDP is concerned. So looking below this area here, I'm looking at the nearest demand levels and supply levels. Remember, my idea here is entirely bullish because of fundamental backing. So I'm just looking just in case price gives us a deeper retracement than the one we currently have. So remember, the market has no definitive way it's going to move. To just move based on what the institutions take to keep forming the same patterns. But what you want to do is to be able to look at areas that these guys may most likely be watching as well. So looking below this, I have two demand levels that I would like price to go to. The current one looks like price is trying to respect it, but it's failing to break this resistance. So that means I'll be watching this resistance. I'm looking for buys above. I'll be looking for a breakout, then probably a retracement, and then I'll do a continuation move to the upside. So why I keep encouraging the retracement, some people like doing the breakout, right? Some people trade the breakout. By breakout, I mean when price breaks out of a resistance, they'll enter the trade, put a stop loss below the resistance, and same with support. But why I don't feel like that is so how would I call it so effective is because sometimes the market's going to fake you out. You'll have a very nice, beautiful resistance level, price fakes you out, and then happens to go in your direction. On the other hand, on a bad day, price is going to definitely never come back beyond your breakout level. That's why I encourage waiting for the breakouts that give you retracements. Because when price gives me a retracement, for example, on a 4-hour time frame now, that means I can drop to a 30-minute time frame or a 15 and look for a nice, beautiful confirmation pattern. It gives me a more, how do I call it, a more confident trade because you have some more leverage or more reason on why you've taken the trade. You have more purpose to take that trade. So pretty much overall, it's just a meaningful trade for you that single particular zone. That's why I tend to like doing that as well. As far as USDJPY, just a perspective. What I'm going to do is I'm going to try to refine a little bit of this. So this candle gets engulfed by two candlesticks. Not the best pattern I would like to see, but what I would like taking this area because it's kind of like a Quasimodo or what they would call a similar to a head and shoulder pattern, just similar. So then I'll refine this other area here to this demand level here. Now, once again, these are areas of consideration. The idea is when price comes to these areas, you're going to go to a low time frame and try to look for a viable or a valued confirmation. That is very, very crucial and very, very important. at the same time. All right, so having had this, I'll just be waiting for price to come to one of my zones. If not, I'll be waiting for price to definitely break out of this area, give me that retracement, and definitely see if I can have that push to the upside. That will be something very, very amazing to watch on USDJPY, because it would definitely be supporting all the narratives that we have been able to build from DXY, being bullish, from the GBP USD, giving us that kind of bearish interest and bearish momentum. Then coming down to USDJPY, of course, would expect it to kind of correlate directly with a dollar index, because when the dollar is buying, the USDJPY will buy, because the dollar is definitely the major currency on this quote. So this is our USDJPY. So we're going to look at, let's probably our GPJPY, one of our favorites, so one of my favorites, I would say. Uh, this is GPJPY. So last week we did have some market anticipations, and you can see this one here was nice, beautiful. Price comes back, bounces off that area, that touch. We have a nice supply zone over here. Price is able to come um, price is able to come through and give us some nice sells within this area here. Of course, it has had difficulty breaking below the support level here, but it did break below the trend line, which is a positive sign. So I'm going to just dive back a little bit, and I'll explain why that it tends to be a positive sign. I think I did mention this last time, why usually you want to have a trend line with either support or resistance level near it, or some would have demand or supply levels, so that when price can break that too, you kind of have an extra, how would I call it, an advantage. You kind of have an extra confluence. If price breaks both a trend line and either support or resistance level, every single time you have more confidence in the trade, or more reasons to take that trade particularly. I think that would be the best way to put that. So coming back from a higher time frame, once again, I want to look at the higher time frame picture just to see where market is most likely, or what it's actually doing. All right, so looking at the weekly time frame, we have seen how aggressive the rise on GU has been, oh sorry, on GPJPY has been for quite some time, and there's been more of like a correction, because we did have an impulsive sell coming in. I think mid last year towards the end of last year, we did have those sales coming in, and they were very, very aggressive for the market itself. So coming into Trump's regime, we did see the GPJPY start a steady recovery, and it's trying to push that. And now here I'm speaking about the currency pair, right? Because when GPJPY is buying, the Japanese yen is actually selling, right? So here what we're seeing is that we did have a breakout from this area. Let me just mark that out. Chances of rate cuts are, or I'm going to answer the questions in the last part of the session, but you can please drop your questions through. We shall look at them in the last segment. After looking at one or two more currency pairs, kindly drop in your questions. I will get to answer them as well. So now, as we had a breakout, now after a breakout, it's just from simple market structure, you're going to realize that price may want to give us a retracement. Now, in most cases, we want to look at how low can the retracement be. You get how low can the retracement be. So now we're going to look into this breakout area and see what areas are still available for GPJPY to retrace to and buy. Now, last time we did see, I think, so we had this move here. It was definitely after the non-farm payrolls, where we had this area here. So the NFP did give us a rise. Then we spoke about this area, and price came tapped into it. Now that this area is out of the way, do we have any other demand zones that may be below this area? When you look at this, we do have this zone here. Price didn't quite get into it. So right now we are still looking at areas of consideration entirely, which means we are going to be watching to see that price gets into these zones and is definitely able to give us some kind of buys up. Now, one of the tricks I tend to use is that in case I'm not so sure of the demand zone, because price tends to give us gap ups, gap downs, and all those things, I'm going to toggle a line chart. So when I come here, I can see a small arc here. So just these two for now are enough, because they're on a high time frame, a 4-hour time frame. So I can be able to give myself space to do other things and think as I wait for price to actually come into these zones. Because when price comes into these zones, their decision levels, remember, that means I'm going to capitalize on a lower time frame. The beauty with a lower time frame is that you're able to, if you get the right confirmations, you're able to actually see catch a move from its origin, literally, right? Like probably a 5 minute has just given you a higher high, higher low, higher high, higher low. That means it's given you conditions of an uptrend. when you catch a move from the 1 minute, by the time a 1 hour, a 4 hour closes, you've caught literally the whole move, literally. That's why confirmations are very important, and you do it going to lower time frames always, because after getting areas of consideration to support your higher time frame bias or narrative, that move has to start from a lower time frame. Then your area of interest is where you expect the move to originate from. So you're going to have all these things coming into play. So it's why I tend to mark these areas of interest on higher time frames. I tend to refine them occasionally, and then usually I just have to wait for price to get there. And now that I know that I need to see ABCD for me to take a trade, I need to see a shift pattern, a smart money reversal. Some guys want to have an RSI around there. It's perfectly okay, quite fine. You can be able to learn how to use it around this, because this is entirely just market structure. It's just market structure, and you just learn to play with market structure. So looking down on intraday time frames, let's say for example the 1H, 4H. Let me look at the 4H first. So I do have a supply level here. I do have a supply level here. Here I just have highs. Some people tend to call it buy side liquidity. The lingo won't really matter much, but here I tend to have that. Then I have this zone and the zone below. So these are just areas of consideration. So usually areas of consideration, you have to let market to be fluid, because you can't control the market. You let the market be fluid in most cases, or you can even see price go lower than that into this lower zone here. But it's not something still so far behind, even if it's a 4 hour time frame. You want to watch the nearest areas in proximity, because they'll give you the next move. Price may come into this area, fail to give you a confirmation, break above it, and definitely continue the push to the upside. Like that is also a possibility when it comes to, of course, the market. You want to have a variety of ways you're going to approach these markets here. So looking at GPJPY, these are things I'm looking at. I'm looking at this area below the previous demand level, because it actually is barely tapped, just support a pip or not. I must say, then there's an area below that price can easily use to try and project itself to the upside. So right about now, we're going to move a bit to BTC USD or the Bitcoin. And so this was a move we had from way back. Probably like 1 week, last week, but one definitely, yeah. We did see price playing out beautifully. Came to a nice supply level, demand level here, sorry. And it pushed for the guys that were in and able to get something to capitalize on this Bitcoin trade. Well, shout out to you guys. The wrong template, sorry. All right, so now back to Bitcoin as well. So as I told you that the thing with breakout is not a must for price to retrace. Price can decide to just push. It can decide to just keep pushing. I always tell guys about the gap up that gold has from 2023 December. It was a very significant gap up, and we have never been there to mitigate it. Speak of Nasdaq, we had a gap up a few weeks ago. I don't see us going back anytime soon to fill it up. Price can decide to just go in the dominant direction through and through. So looking at this, we do have a breakout on a weekly time frame, of course. We can't wait for a weekly retracement. Now looking at the daily time frame at this point, we can see that currently price is in some kind of a pennant. The guys that do candlestick patterns, so this is kind of like a pennant, or some guys prefer to call it an isosceles triangle. So some guys call it a falling hedge, buying hedge. So the lingo just keeps changing, but this is the whole significance. This is a resistance, this is a support. So usually we want this area to break to the upside. So if we see a break to the upside, we can expect some good buys continuously pushing. If you see one to the downside, we are going to look at target areas or demand levels that price can easily want to use, literally as an anchor to probably continue pushing to the upside. Sorry. So we have this demand level that price could easily use as an anchor as well. Then we have, does this engulf? Yes, it does engulf. So it becomes a nice, beautiful demand level as well. So we do have that demand level as well there. So once the price pushing that side, but of course, in order to achieve that price, we'll have to first solidly, nicely break out of this area, push to the upside, and then continue pushing to the downside. So I think based on the chart, as you can see it here, the first time you tried to break out, it got rejected and it failed to push to the downside. So there is that as well. So it's on, as far as Bitcoin is concerned, we can see that, or we can just see it break out and continue pushing to the upside. That's also another viable possibility for for this as Papa, sorry, for this BTC, for this BTC to actually push, for this pair to push to the upside, since it's still bullish. And of course, we all know Trump did sign an ETF law, not directly on Bitcoin, but on crypto, and can be used to facilitate transactions, which is a boost for the general crypto world, including Bitcoin, because that means that that's a step towards regulating Bitcoin. So it's a pair you'd want to watch closely just in case. It gives us a nice retracement because its moves tend to be very, very aggressive time and time again. So now let's look a bit at gold. We haven't looked at gold, then we shall dive into your questions after looking at gold, what gold has to offer for us. So you can keep dropping your questions and in the comment section. We shall get to them in a bit. So looking at gold, let's start it in from the weekly time frame. Of course, it has been bullish. Last week had a flip or a massive turn of events. Of course, starting from about Tuesday, there were about 2-3 days. From about Tuesday, Wednesday, let's take Wednesday, when we had an aggressive shift in momentum last week. Of course, after details on the Japanese deal were able to come out into light. So Tuesday, Wednesday, Thursday, Friday. From Tuesday, you're right. After they signed that deal, we did see that dollar give us a very, very nice recovery. And then, of course, the gold had to definitely push to the downside. So looking at the past previous days, they have been so bearish, so bearish. You wouldn't want to fight the trend or the current momentum where it's going to. So what I'm going to do is I'm going to watch supply zones. Unless otherwise, I'm going to watch supply zones to look for our selling opportunities. For the time being, now it's intraday entirely. These extreme zones are always my favorite zones in case price gives a deep retracement and then continues impulsing, because you tend to catch a bit more of the move as well, right? So looking at where price currently is, it's within a demand level already, which is also another sign of being careful around these. So price already at a supply level as well, and then we have two more supply levels right above it. So remember, these are areas of consideration. Just marking them out. These are 4-hour time frame. You're marking them out just to watch what price does when it goes to those. So you can be able to refine these zones still. You can be able to refine them if you want, but refining can take a toll on you. For example, we have the first refined zone that looks to have given us a nice, beautiful reaction on that dollar, but then we have a demand level right below it. So the my anticipation will be price is pushing that is pushing this pair into this area here. Then whatever happens, then from this area here, price able to continue moving to the upside. So this is what tends to happen in most cases, because price then moving a straight direction. So looking at this kind of like a consolidation, I'll tend to have this as one supply level. So that's what I'll be looking at as far as gold bullish moves are concerned. Just in case, sorry, in terms of gold supply levels are concerned, I won't be looking at bullish moves right now yet, not until we have a nice, beautiful break above these areas there. So let's just see what would be the possible area to look for nice breakouts to buys. Personally, I don't really feel comfortable looking for buys at the time being until I'm sure what the Fed is going to be putting into the market tomorrow, what Paul will be saying to the people, where their head is actually looking at. So that will be a tricky one. But as far as structure is concerned, I'll be looking to sell because that's where the momentum is. Previous weekly candle was bearish, previous daily candle was bearish, which are all nice, beautiful signs as far as bears are concerned. So you can see price coming into this area. Then you'd want to see if it gives you a confirmation to looking for your sells. On the other hand, you'd want to see a breakout of these lows here that act as a support level. So that can also be valid. You want to see breakout of these lows. And of course, break out with a candlestick closure of that low, then you can start looking for a selling opportunity. So we have about 2-3 supply levels immediately above that you can be able to use to try and push a price all the way down. So that's a perspective I would really want to be looking at or take up on as far as gold is concerned. So at this juncture, I'm going to be taking on a few of your questions. Then we see how best you can be able to capitalize on the trading opportunities available in the market this week. So those are areas of considerations I'll be looking at to take confirmation trades. So I'm going to start off with AI music. AI music says, morning Emmanuel, chances of a red card this quarter on the table. So the chances are there, but I think they are still very, very low. The one thing that you can be sure of is that we shall have at least up to 40 basis points and rate cuts by the end of the year. Uh, as of, is it ready now? I don't think it's ready. I don't think Powell is going to cut rates yet. He's going to stall once again and first watch the backlash that's going to come from the EU, a Trump trade deal. That's what I believe is going to speak out. So the chances are there, but I think they are very minimal. What you'd want to pay attention to is what he says and how he says it. Is he sounding hawkish or dovish, or is he sounding basically just, is it positive about cutting rates? Is it giving you hope of cutting more rates? Because we came from expecting up to 3 rate cuts in the beginning of the year, and right now we are anticipating probably 2 rate cuts of only up to 40 basis points collectively. So it's with Powell, I expect him to hold rates steady. That's from my perspective as well. Yeah, that's from AI Music. So any other questions? In case you have a question, you can just kindly drop it in the chat in about the next 3 minutes. Then we can see if we can get into it, or we could as well call it a day and look for the market opportunities as the market keeps moving. All right. So looks like there are no questions. So I would like to remind you guys that don't forget to create your FX Pesa accounts. The link is in the description. And of course, support will reach out to you in case you need any assistance from free classes, free workshops, free seminars. They are offered from all sides. Kenya, we have online classes going on, and you can reach out to FX Pesa support to get the calendar and how you can be able to be a part of it as well. Uganda, we do have physical classes at the FX Pesa Academy here at Shumi Building, Lumumba Avenue. Dar es Salaam as well, we do have an academy there as well. So feel free to enroll for classes in all those different locations. Do not forget to open up your FX Spacer account as well. Links in description. So until next time. So until next time, since there are no more questions, for AI Music, as I said, the chances could be there, but I do expect him to hold them steady, because my reason, as I told you, is because I expect Powell to rely or to give an excuse of the current deals we have had, the Japan and EU, because he wants data, right? And as we all know that the data they collect is quarterly to make a decision. So right now we have had the first 2 quarters of Trump, no recession in play, but now we haven't had a full effect on the tariffs because Trump decided to pause them, and now he wants data from coming in from the trade deals. That's insightful information. Thanks, Emmanuel. We wait for the news release and press conference to follow up on Powell's speech. 100%, 100%. Yeah. Let's wait and see. Then we shall get to see how the market prices it in, as usual, as we always do. Other than that, I would like to wish you guys all the best. Don't forget to like, subscribe, share, comment on all the platforms from X to YouTube. And until next time, we meet again.